We're going to focus on U.S.-based companies, United States. Get your pen out, please. Write down these tickers as we pull them. Basic materials, agriculture matters. Building materials matter. Chemicals matter. Forest matters. Metals matter. Steel matters. Consumer cyclical, don't really care about it too much except for the home builders and the auto manufacturers and the packaging and container companies. And maybe I don't want to do the department stores because I don't want to have to end up in a situation where I have to own their inventory. Banks, regional. Real estate, we will look at industrial REITs because those are good businesses. And we will look at consumer defensive. Don't care about that. Don't care about CPD. Do care about farm products. Healthcare. No. Utilities. Yes. Communications. Don't care. Energy. Absolutely. All oil and gas, all other forms of energy, industrial. We will look at one more, heavy farm machinery. In industrial products, we want metal fabrication, tools and accessory, electrical equipment, and special industrial machinery. We will take the airlines, we will take the marine shipping, and we will take the railroads and the trucks. And no tech. Don't care about the tech. Don't care about the computers. Don't care about anything else. Okay. Now, the thing about this, when we talk about book value, the banks themselves are going to be operating a little bit differently than what we're seeking. But for the purposes of this, we want no OTC. We do not want anything that is trading over the counter. We only want U.S.-based stocks trading on actual U.S. exchanges. Then we're going to look at book value. We're going to make sure that the book value of the company keep it positive. We'll just start with tangible book. Now, I want to just point out some of the parts. 237 companies exist in this space that are trading for technically less than the sum of their parts. Let's scroll up and let's move that tangible book value down. I hit it at 1. This will give you a good place to start. So you got 159 companies right now trading for less than their tangible book value. And there's some banks and there's some kind of crazy stuff in here. There's some chemicals. But, you look at a company like Beazer Homes. This is a home builder trading at $10 per share with an absolutely great balance sheet that looks like a little bit of a value trap. I get it. What we're seeing here are really good companies operating in businesses and things that we need. Let's look at the things that are undervalued or fairly valued based on the readings. You got a lot of banks. You're going to have a lot of banks, right? We're never going to run short on those. But look at XSteel. We've talked about this before. 2057. Its tangible book value is 36. It seems a little high. I'd say that its break-even price is around 30. Natural Gas Servicing Group. What do? Well, they're trading for 56 cents on the dollar. This is what happens in the event that the company goes under and has to pay its shareholders if it goes under. Alto. Good company, needed, bulk shipping, Eagle Bulk Shipping. Fairly valued, but trading under its tangible book. And tangible, I want to see book value. I don't want to just see tangible. I want to try to find the actual book value itself. But you can see that, based on some of these companies, just based on their expected cash flows, it's a good company, by the way, New Park Resources. Tangible book at 4, stocks at 3. Balance sheet, a little questionable, I would say. Let's look at the debt issue real quick. Let me pull some debt. Probability of, let's find the Z-score and let's put that above 2.9. And if I'm going to do a Z-score, I got to take the banks out. Doesn't count. Bear with me. Take the banks out. All right. So you got 11 companies here. 11 companies right now that are trading under some of their parts, that have a virtually 0% probability of a financial distress event, and they're all fairly significantly or modestly undervalued according to the calculations of Guru Focus. And what do they all do? They do things that we need. Chemicals, home building, industrial products, agriculture, home building, industrial products, home building, and 2 steel companies. Zeus, KB Home, Herco, CCS, IPI, POWL, Taylor Devices, TAYD, CVR, Chicago Rivet, great company, Toll Brothers, and Cole Molding Technologies. And when you see this, you buy it, you hold it, and you don't look at it. Because these are very good companies doing things that we're going to need moving forward. And again, Intrepid Potash, I know that this thing has been an absolute mind-blowing bounce all year. IPI is the ticker. Potash. The stock is incredibly cheap. It's back where it was at its lows before we had the huge run-up to start the year. Fertilizer prices are going to continue to rise. It creates an interesting long-term trade. And you know that it's down near, appears to be a bottom. IPI. Let's go right here. Price to book, 78 cents on the book. Cheap as can be on earnings, 8 forward earnings. Good balance sheet. Very little debt. In a place that we need, in a world that we need to operate. So I look at IPI and I think, how can I trade it? Well, maybe I'll sell puts on it down at that 35, 36 level, which is the lows of 2022. I think you sell puts on all of them, right? If you want to trade or you do a spread, they're all great companies. So just keep this in mind. You want to have low price to book. You want to have a very strong Z-score. You want to see a good, strong balance sheet. And you want to operate in places where you know they're going to be required moving forward. There's a nice little 150% analysis from TradingView. I have no idea what I'm looking at, but IPI, if we get a move positive on materials, I will look at IPI as a trade.